The last question is B18.3. Grillmaster Company sells total outdoor grilling solutions, providing gas and charcoal grills, accessories, and installation services for custom patio grilling stations. So instructions respond to the requirements related to the following independent revenue arrangements for Grillmaster products and services. So A. Grillmaster offers contract GM205, which is comprised of a freestanding gas grill for small patio use plus installation to a customer's gas line for a total price of $800. On a standalone basis, the grill sells for $700 with a cost of $425, and Grillmaster estimates that the standalone selling price of the installation service based on cost plus estimation is $150. The selling of the grill and the installation services should be considered two performance obligations. The Grillmaster signed 10 GM205 contracts on April 20th, 2022, and customers paid the contract price in cash. The grills were delivered and installed on May 15, 2022. Prepare journal entries for Grillmaster for GM205 in April and May 2022. So as the question stated already, there are two performance obligations. So therefore, we need to allocate the uh, 800 into the grill itself and the installation cost. So the allocation, the gas grill itself is $700. So 700 divided by 700 plus 150 times 800 in the nearest dollar is 659. For the installation service is $150 on standalone set price basis. So $150 divided by 700 plus 150 times 800, which is 141 on the nearest dollar. So 800 in total. In April 20th 2022, so the customer has paid it already in cash before the goods or the grills were delivered. Okay, so therefore what we can record is debit cash 8,000, which is from 800 times 10 units, and then credit unearned sales revenue because we haven't delivered the grill. Okay, so 659 divided by 10 actually, sorry, times 10 actually, but if you still use the decimals, it is 6,588. And then credit unearned service revenue, which is the installation. So 141 times 10, or you can use the decimals. So it is 1,412. And then on the May 15, when it is already delivered and installed, we'll just debit the unearned sales and service revenue and then become the sales and the service revenue. And then we'll debit the COGS, okay, which is um, from 425 times 10. Yeah. So therefore, debit COGS, credit inventory 4,250. And then B, the state of Kentucky is planning major renovations in its parks during 2022 and enters into a contract with Grillmaster to purchase 400 durable, easy maintenance standard charcoal grills during 2022. The grills are priced at $200 each with a cost of $160 each, and Grillmaster provides a 6% volume discount if the state purchases at least 300 grills during 2022. On April 17, 2022, Grillmaster delivered and received payment for 280 grills. Based on prior experience with the state of Kentucky renovation projects, the delivery of these many grills makes it certain that the state will meet the discount threshold. Prepare the journal entries for Grillmaster for grills sold on April 17, 2022. Assume the company records sales transactions net. Yeah, so this is variable considerations also. So based on experience, the state will meet the discount volume. So we will just record the sales after the discount. So it is the sales on April 17, 2022. We will just debit cash credit sales from the 280 units times $200. Okay, so $200 times the 280. You can directly times 94% of 100 minus 6%. So the amount is 52,640. And then debits UGS credit inventory from 160 times 280 grills. So it's 44,800. And then C, Grillmaster sells its specialty combination gas wood-fired grills to local restaurants. Each grill is sold for $1,000 with cost of $550 on credit with terms 3/30, net 90. Prepare the journal entries for the sale of trading grills on September 1st, 2022 and upon payment, assuming the customer paid on 1. September 25th, 2022 and 2. October 15th, 2022. Assume the company records sales net. So we will just record the sales of the 20 grills uh, net with the discount of 3%. Okay, so on September 1st, 2022, we will debit accounts receivable credit sales with 1000 times 20, you can times 97% or 100 minus 3%. So it is 90,000, 19,400. And then debits UGS credit inventory from 550 times 20, so 11,000. And then if the payment is on September 25th, 2022, you can just simply debit cash credit accounts receivable with the net amount 19,400. But if the payment is on October 15, 2022, which is over 30 days already, okay, so we'll receive the full amount, debit cash 20,000, yeah, from 20 times 1,000, and then credit accounts receivable 19,400, and then credit sales discount forfeited 600 because the customer failed to pay uh, within 30 days. And then D, on October 1st, 2022, Grillmaster sold one of its super deluxe combination gas charcoal grills to a local builder. The builder plans to install it in one of its parade of homes houses. Grillmaster accepted a 3-year zero interest bearing note with face amount of 5,324. The grill has an inventory cost of $2,700. An interest rate of 10% is an appropriate market rate of interest for this customer. Prepare the journal entries on October 1st, 2022 and December 31st, 2022. So using note, we must calculate the present value of notes receivable. So you can just use the formula from the Excel. The rate is 10%, the NPR is 3 years, and then no payment because zero interest bearing. Future value is 5,324 and the type is 0. So the present value is 4,000. On October 1st, we can just record the present value. So debit notes receivable credit sales 4,000, then debit UGS credit inventory 2,700, okay, from question. And then at the end of the year, remember to record the interest, the amortization, okay. So you will debit notes receivable credit interest revenue from 10% times 3/12 times 4,000. Yeah, so 3/12 because October 1st, December 31st is only 3 months. And then the result is 100.